Why a reverse mortgage can help you build financial real estate wealth. 3 must-knows when it comes to adding this mortgage tool into your landlord arsenal. Hello, everyone. My name is Sylvia Ho, and I'm a financial landlord consultant. I work solely with landlords to help landlords save money in regards to decreasing the amount of taxes that they pay to the government legally and decreasing the interest that they pay the banks. So, what is a reverse mortgage? A reverse mortgage is for anybody over the age of 55 that lives here in Canada. And essentially, it is a mortgage that you have the option of making your mortgage payments. So, you know, the mortgage payments that we have right now today, like at the TDs, Scotias, Royal Banks of the world, you must make mortgage payments every single month. But what's on a reverse mortgage, you have the option of not to. So that's the first thing. Second thing, think of a reverse mortgage as a glorified line of credit, super large line of credit that doesn't require a lot of income to qualify for it. So what will happen is lenders that do reverse mortgages will look at the equity that's in your home. And with the equity that's in your home, they will give you a certain percentage. And that percentage that they will loan you is very, very low. So for example, let's just say your place is worth $1 million. They will give you $400,000. But the beauty about it is that you don't need to make a lot of money to qualify for this $400,000 mortgage slash line of credit. In fact, you don't even need to make any money to be able to qualify for a reverse mortgage. All the banks want to know is that you own this property. So there are two main contenders here in Canada for reverse mortgages. That's Home Equity Bank, which is also known as CHIP, and Equitable Bank. So those are the two lenders. There are other lenders that offer reverse mortgages, but those are the two main ones. There are big differences between each one. For example, I was looking at a reverse mortgage for a client, and they had a specific plan in mind. And for me, I prefer to have them go to Equitable Bank versus Home Equity Bank. And for them, it had to do with the penalty when they were planning to discharge it. It also had to do with the loan to value and how much they can get. And it also had to do with the interest rates. So there are different variables when it comes to reverse mortgages. There are some type of reverse mortgages where you could get monthly payments put into your bank account every single month versus a large lump sum. And then one bank is better than the other. Okay. When it comes to reverse mortgages and the horror stories that you hear, most of the time those horror stories are from the States. Okay, so reverse mortgages here in Canada, they're very, very different from the ones in the States. Here in Canada, you have to go through lawyers. The individual that's getting the mortgage, the reverse mortgage, has to get independent legal advice. So they're very, very, very protected. Like, you got to go through a lot of hoops before you can get a reverse mortgage, because they don't want people over the age of 55. Most individuals who get reverse mortgages are between 70 to 80, 85 years old, and we don't want them to get scammed. I hope that makes sense, right? Okay, so what else do you need to know about reverse mortgages? So I think I'm going to end up doing this as a two-part series, where today I'm going to talk about what a reverse mortgage is, and then next week I'm going to talk about how I help some clients build real estate wealth in using a reverse mortgage. So other things that you need to know about a reverse mortgage is, does the lender take over your house? So no, they don't. It's the same thing. When you get a reverse mortgage, they put a lien against your house, but that's the same thing as TD Bank or Scotia Bank. They use your home as collateral to lend you this mortgage amount or this line of credit amount. That's the same thing with TD Bank, Scotia Bank, Royal Bank, any bank, right? So the house, when you get a reverse mortgage, your house still belongs to you. It's still under your name. Okay. The difference is, instead of having a mortgage that's registered with CIBC or Scotia Bank, it is with the reverse mortgage company. So those are the differences with reverse mortgages. I've helped a lot of it. In my opinion, there are two different ways to use a reverse mortgage. The first way, which is the most popular way, which it's not a good way to use mortgages, and I'll talk to use a reverse mortgage. And the most popular way is, hey Sylvia, my mom or dad or we've run out of money, we're house rich, cash flow poor, we need to tap in to the equity of our house. We've used up all our RSPs. The CPP and OAS, we only get about $1,500 per month, and you can't live on $1,500 per month here in Toronto area. So we need to tap into the equity. So what a lot of applicants will do is they'll tap into the equity, and then they'll get like $2,000 deposited into their bank account every single month, right? And that kind of supplements their CPP and OAS, and if they have any RSPs, right? So that's one way. Another way that you can do clients who get reverse mortgages do is they will pay off their current mortgage. So let's just say you have a parent who has a mortgage at CIBC. They owe $300,000 and they're making mortgage payments of $1,500 per month. And they can't afford it because their CPP and OAS is $1,500 per month. So what will happen is they're like, hey, kids, we need help financially. Can you please give us money? Right? Now, there are some kids that can afford to give the parents money, and there are some kids that cannot, right? So one option is to pay off that $300,000 mortgage with a reverse mortgage, and now that parent does not have to make those payments anymore. So those are two different ways, the most popular ways in which there are people use reverse mortgages who don't qualify at the traditional bank. Next week, I am going to talk about how a reverse mortgage can help you build real estate wealth, and how landlords should have this in their tools, their arsenal to build wealth. It's actually very, very fun if you start planning early and start having those conversations early, where you can use a reverse mortgage once you turn the age of 55 and build wealth from there. All right. So next week, tune in and I will talk to you about reverse mortgages and why it is a must for landlords to consider this as an arsenal, as a tool for you to build wealth. So if you have any questions about reverse mortgages, comment below and just say, hey, Sylvia, how about this scenario? Would that work? I'm a reverse mortgage specialist, and I help my clients get reverse mortgages and just get them into the right product. My name is Sylvia Ho, and I'm a financial landlord consultant. I'm also a mortgage agent. I have been a mortgage agent for the last 24 years, and I help landlords who to save money and to decrease the taxes that they pay and cut the interest that they pay the banks. Thanks so much for listening. I'll talk to you later. Bye now.